Good morning from Sydney, and New York's closed, and it was a Monday. It's supposed to be a strong day, but really only muddled sideways. I know a lot of the headlines say that the market made new record highs, but really it's been in the range of the last few days. What I find interesting is again the price action in gold and oil. I saw some headlines that said, "Oh, oil's higher because people are worried about the summer demand for fuel in the northern hemisphere, in the US particularly." I don't think that's why oil is strong. You can see traction gaining pace in gold as well. In the background, be very aware. Okay, there's the news headlines about the French elections, snap elections, but be aware in the background, more serious conflict between direct contact between NATO forces and Russian forces is becoming more and more likely, not less likely. And that intensification is actually a background to people in the know and governments around the world wanting to stockpile, build up their reserves of both gold and oil. So it's not just an investor event, it's also a government level event. Therefore, I think oil has bottomed, went lower than I thought. I think gold has probably bottomed. Gold's a good indicator of the outlook for the geopolitical tensions. Basically, if gold stays above 2,770, then there are geopolitical tensions we need to be worried about. If gold were to slip through that 70 levels, slip through 65, perhaps peace awaits us over the next decade. Now, coming to the French elections, Macron's very out of touch with these people. There's massive demonstrations against him over the last 12 months. We don't always see the full extent of what's happening in France in terms of farmers and other interest groups really very angry with the French government and the French president. He's booed at sporting events. So he's called this snap election as a last hurrah chance to stay in power. He's not calling a snap election for France because he feels assured of his party's success moving forward in the long run. He's just trying to extend his tenure while he can for his party. The first polling done in France suggests that far-right coalition will win this election in France, and I would think that that will be the case as well. They may not have as good a clear a majority as they need to govern in their own right, but certainly I think the Macron is in trouble. The shift towards far right, or just the shift towards right-wing candidates in Europe is very profound because the quality of life of most Europeans has really cratered in recent years under the existing policies. And the majority of people in Europe do not want conflict with Russia, and yet Macron's pushing in that direction. So out of step with the voting public is what a lot of governments in Europe are at the moment. And you've got to remember that these large immigration levels are, as other economists have pointed out, an attack on the working and middle class of one's own country when it is done in such extreme numbers as is currently happening around the West. Now, I don't say this as anything against immigration. Immigration's fantastic. Let's have immigration. But it has to be immigration that a society, infrastructure, and the existing population can cope with and embrace and further the success of those immigrants. What a lot of Western governments have done, I think, is to have massive immigration, thinking that everyone who's an immigrant will vote for the party that brought in the immigration. So really, it's a trounce the society to stay in power move, and falsifying, if you like, window dressing GDP numbers for a short period of time. But what happens is, not only is life more difficult for the existing population when immigration is too extreme, I'm only talking about extreme immigration and its impact economically on a society. It's not only, a negative impact when it's extreme for the existing population, it's a negative impact for the people who are immigrating. So they have a lower quality of life because the immigration level's been too high. The existing population has a lower quality of life. And then the existing government gets voted out of power. So this is going to completely backfire on a whole of left and right-wing governments around the world who have embraced excessive immigration that their infrastructure and their domestic population cannot embrace and further the goodness of and the success of and the education of and the quality of life of, because it's just too many people too fast for the existing infrastructure. So pro-immigration, but not extreme immigration that hurts the immigrants as well as the existing population. So in economic terms, in the outlook for markets, I think this means that we will have a shift of governments across Europe over the next couple of years, probably starting with France, and this will unsettle markets to some degree. The US dollar's had a huge bounce, and it looks supported at these levels. And again, the US dollar's caught between being a complete, becoming a valueless currency on its fiscal crisis, continuing fiscal crisis spending, and being a safe haven away from Europe should NATO Russian forces, move towards greater conflict. And you think, you may not know, you could know more than me, but this is not something that is compartmentalized. There are increasing risks of direct conflict, and it's not getting the press it should. Significant losses have occurred for various nations' mercenary forces, and there is a lot of pressure building, particularly from Macron, towards troops on the ground in Ukraine. And I think that will be one of the things that will work against him in this upcoming election. So for the euro, I think further downward pressure. For gold up and for oil up. For stocks, very mixed bag. Monday should have been a stronger day in the US, as it usually is. It wasn't. We've been going sideways here for several days now in the US market, not kicking on really in the US 500. Both sides of the ledger have an argument. Bulls and bears have a price action argument here. Bulls don't have a fundamental economic argument here. I think the outlook for the US economy is, despite occasionally good data, is overall a continuing weak underperformance. In Australia, terrible economic outlook. We're almost started a recession in Q1, probably starting a recession in Q2, Q3, maybe even into Q4. And that means that stocks in Australia are very, very overvalued, which is why, as I suggested a week ago, they would underperform over the past week, the US market, and I think that trend will continue. I hope you have a great day, and thank you for listening in. cliffordbennett.com.au, and I also like, if you're going to be trading, propx24.com. But do please take a visit to my website, cliffordbennett.com.au, and if I can help you in any way, also email me. Thanks very much.